Hi, Keith. Welcome back to F.A.C.E.
Hey Dale, how's everyone
Hi,
this morning?
good. How are you doing, Keith?
Good. I'm trying to
So,
turn on. Do you want me to put a video on, or we just doing audio? What do you prefer here?
yeah, do you have anything to show as far as a screen share?
No, well, no, I just have a good face for radio. I think that's what
Okay.
I'm good at. We'll
Yeah,
just have a good
so,
conversation. But
all right, go ahead. Turn
if you
on
want
your
to put
video.
if you want to put it on, we can.
We could do that.
Okay, I can see you. It's not letting me turn it on here for some reason.
The video?
Yeah.
Okay. Well, then I'll just share my screen and we could move around and talk about different markets. Now, I know,
Okay.
Keith, that you've been a bear in bonds for a while, and you were looking for some type of problem. Am I correct in describing that you thought there could be problems with sovereign debt, or was it really across the board, all kinds of debt?
Yeah, so so first of all, we're based here in Canada for everybody, if you're not familiar with us. And
Right.
I was offshore for about 12 years as well. So I have a pretty good background in, what we're call out, how global money moves around the world, especially for private family offices. And, one of the main, I guess, experiences from that, a lot of people probably they're just not aware of, is that um, a lot of money in the world, they just run away from trouble. They're not trading. They just want to make sure, they become wealthy from selling a business or something like that. No one got wealthy from the stock market. They just want to simply preserve what they have. And then the key way to do that is to run away from trouble all the time. So that's just a bit of an overlay here. So with
Okay.
us, with us at IceCap, we run two kinds of portfolios. One is a long-term, long only global macro focus. And so for that strategy, we've been very good at avoiding losses in the market. And what you want to do with global macro really is it's not day-to-day, week-to-week, monthly trading. Is identifying when a big turning point is going to occur, or the conditions are set for it to occur. And
Do you think that
so
we
that
might have one? I'm putting up the dollar here, Keith, because there are some counts that are saying this is a bear market rally in the dollar, and that we could, get to 98, maybe 100, but the story might be, if you want to stay away from trouble, that if this turns out to be a failing rally and dollars heading down, is you have to be in the right currency in a situation like that. Maybe the dollar takes a year off. It had a 1 year rally to shake, squeeze out. Down here, everyone was expecting a continued bear market in the dollar coming into 2021. Now everyone's expecting a continuation of the dollar recovery into 2022. What's your work saying about it? The buck.
Yeah, well, I mean, short term that could certainly happen, but
No, not short term,
just
long term. Yeah.
yeah, long term, we are a very big dollar bull.
Okay.
And
Milkshake
yeah,
theory.
no, what theory? Sorry.
The milkshake theory. A lot of the dollar bulls have this milkshake theory, and it's really because of emerging market debt denominated in dollars. And, plus, I was reading something about the euro dollar in Europe, that was started 50 years ago, that that market seizes up once in a while too, which creates a bid for the dollar. So
Yeah,
what's your scenario for a big bull market in the dollar from here?
yeah, there's a lot of similarities with that. So so I'll walk through on why we expect this to happen. But then but we also manage a global macro fund,
Yeah.
and we can be directionless, or neither bullish or
Okay.
bearish. We don't hate or love or hate any market in that strategy, and that can have very short-term trading. So we're involved in all parts of the market. We're not stock pickers. We're not bottom up at all. It's really top down, moving around. But what a lot of people maybe don't appreciate with the dollar, it's our view things will get so bad, so stressed, a crisis will re-escalate, stress will re-escalate around the world. And it draws money into the dollar, into the overnight treasury market, because it's the only market that's large enough and liquid enough to park money overnight, to get it out the next day. The price hasn't hardly moved at all. You can't do that anywhere else in the world. You can't do it in yen, Canadian dollar, not real estate. You can't do it in gold. I mean, and for that reason, it's extremely important to understand.
Okay.
However, so the main view that we have though is so first of all, and it's not complimentary towards humans, but we really are sheep. Most people have a linear perspective of the world. Whatever happened last week will continue this week. What happened last year will continue, and stuff like that. But the big turning points that take place, they're so easy to see, but yet people don't get to see them. The industry doesn't share them. The mainstream media doesn't share it. The big banks and so forth. So first of all, this is the way we expect things to move along here. And I hope this is helpful for everyone that's listening today. Yeah. So first of all, we've had this perfect setup, and what I mean by that, so long-term rates, they peaked in 1982.
Yeah.
So depending on where you were in the world, it could be anywhere from say 15 to 20%. And from that point onward, rates they continued to went down. So we all remember Bill Gross, maybe at PIMCO.
Sure.
He was they call Bill the bond king. Yeah, he
Yeah.
wasn't the bond king. He was the duration king. He just happened to be in the world's greatest environment with rates going down.
They call Gartman the commodity king, and on Twitter everyone fades him. So
I know he's it was pretty easy to make fun
so
of him,
you don't want to be kinged on CNBC, and you don't want to be man of the year in Time magazine either, do you?
That's a fair point.
Yeah. All right.
But with rates coming down so much, and every time there was a crisis around the world, the central banks or on the fiscal side, they would walk in and bail people out. And by doing that, they just simply push things down the road a little bit. And then all of a sudden, the housing crisis hit back in 08, 09. And what happened then, everyone went to zero and negative rates, but they should have let the market reset. So let banks go under, right? Let shareholders absorb the losses and so forth. That didn't happen. So instead of having long-term rates start marching higher again, like they did in the early 60s up to the early 80s, the entire yield curve has been flattened for 12 to 14 years. And this is incredibly important. So we've had, overnight rates at either 0%. We've had negative rates in some big markets around the world. Everyone's been doing QE. And what this has done, it's enabled debt to absolutely surge around the world. So public sector debt, especially at the sovereign level, same at the state or provincial level up here in Canada. Household debt. Up here in Canada, we have this incredible housing market bubble, or depending on which side you're on. I don't know if we have many Canadians on the call today.
Yeah.
But
look, it's happening globally. What about the market in the US is the same?
Yeah, it's just
up.
Yeah, and people, they say, well, it's good value and stuff like that. But what they don't really understand is that there are a couple of things happening here. One is that low rates have really enabled borrowing. Central banks, especially here in Canada and the federal government, they've been extremely clear. So one thing as a money manager, you never take sides. You never say, hey, I lean left, I lean right, or north or south. It doesn't matter. The most important tool you can have as a manager with your money is simply understanding how the policymakers move, what they do, and they're always incredibly consistent. So as long as you appreciate that, then you can say, oh, wow, okay, we know what's going to happen. So in Canada, for example, they've been very clear at the central bank level, as well as the regulators and the feds. They are not going to crash this housing bubble. They're not going to do it. So instead, that bubble will get pricked by some event outside of Canada, which we expect will happen. So Dale, the people in Vancouver, especially, they say there's a lot of Chinese money coming in and going to Toronto as well. They say because Vancouver is so awesome and everything. It's a lovely city. However, you got to look at the other side of the coin as well. And instead of saying the Chinese money is coming in because the assets are so attractive in Canada, instead you have to look at it and say, well, why is it so bad in China? Why do they want to get their money out of China? You got to look at it from both sides. So we've now had, again, like 10, 12, 14 years now of this, like, this incredible risk on environment where debt has been exploding higher and rates have not moved higher. And so in our world, when we look at rates, you also got to look at not only sovereign rates and short-term and long-term across
Mhm.
the yield, but also credit spreads at the investment grade
Right.
level, as what the high yield level. And because the central banks have tried incredibly hard to suppress risk or volatility on the yield curve, it's forced more and more investors to move out into the bond market. So out into duration, out into credit, an emerging market space as well. And people have been paid for that. That they've gotten their income throughout the year and some capital appreciation. But what's happening now is that because the volatility has been suppressed across equity markets, sovereign debt, credit spreads, fixed income markets, especially if you look at your volatility, across all the majors to the dollar, you'll see it. Even in commodity markets, volatility has been
Oh
suppressed.
yeah.
Everyone's been lulled into this, this false sense that risk does not exist, and especially from June of 2020, and now all of a sudden the conditions have changed, and with that you're starting to see some stress, bubbles, or things are happening to say, oh wow, it is not a riskless world. Events can happen, and when that happens, all of a sudden really bad things happen. So credit spreads start to widen. Commodity markets are going well, like the energy sector, for example. Like, what governments around the world, because of their again, this is where, if you understand policy, will say, yeah, absolutely. And it doesn't matter if you agree or disagree with it. The entire Western world, they're adopting green energy policies. They're using climate change as their platform for that. So because of that, they're forcing out coal, they're forcing out the use of oil, and so forth. And they're trying to encourage everyone to use green energy. Well, if you look at Europe right now, with the price of natural gas,
Yeah.
it's gone through the roof. Like, it's just, again, it's creating these markets where financial markets are going to start to affect economics, which affects geopolitics and so forth. So we're in this world right now. So we've created this sort of a map or a path to expect. So you can sort of picture going from left to right. We've already experienced a credit event back in March of 2020. The central banks came in the US and really sort of cleaned it up or bailed them out. But the next bubble that's up is the emerging market world. Once that pops, we're starting to see that now take place in Turkey, especially. Then,
Okay.
then all of a sudden, then money starts to move. People will say, "Wow, you know what? I made some good money over the last 18 months. I'm gonna start to pocket this." And all of a sudden, that little snowball becomes bigger and bigger into the snowman. Like the winter analogy, Dale. We're in winter now here in Canada.
Yeah.
We have
Yeah.
snow.
And yesterday was the beginning,
Yeah, absolutely.
right? Solstice. Uh, so you'll basically we're going to see bond bubbles popped, equity markets lower, strong dollar, deflationary move, real estate, one of the most illiquid investments, suffer as well. And we don't know what the pin is that's going to pop the bubble. I have my guess. My guess is China,
Yeah, it could be.
but
And
maybe not till after the Olympics. So they want things to look good, but already the virus is keeping NHL players from going to compete,
I
and
mean,
they've had,
yeah,
yeah,
so sorry. So like, but COVID,
it's a
this new wave that's coming through,
yeah,
that's important as well. So depending on where you are in the world, like if you're in the US, you say down to the southeast, I've had friends down there, live there. Other friends have traveled there recently, and they said, "Hey, life's going on. Like it's not that big of a
Yeah, life
deal.
goes on.
Life goes on. Up here in Canada, and especially where I am, people are kind of nervous all the time. Like they're going towards not hard, but pretty close to hard lockdowns again coming up. Small businesses get hurt with that, and again,
Well, I
that's
know a
what
couple of
policymakers are
Canadians that,
going to do.
yeah, I know a couple of Canadians that only became vaccinated because they couldn't go anywhere, do anything without being vaccinated. Can't go to a restaurant. You can't get on a bus. You can't do anything without uh, being vaccinated. Is that true?
Yeah, absolutely.
Yeah,
And you have the social aspect of it as well, Dale. I mean,
yeah.
like people will just, you're not allowed to have the conversation about it either, or ask questions. And, like I
It's
always
not in
say,
our
is
DNA to be to isolate ourselves. We all have herd instinct of being part of a tribe or something, and yeah, isolation is. We probably have a global psychiatric crisis happening at the same time, uh, and these might what you're saying is, Keith, these are the good old days to what's
yeah.
ahead.
I think it's going to be so. Think about it. I mean, sort of. You asked like, what's which pin will sort of prick this.
Yeah.
Again, it's we're pretty confident it's going to happen in the emerging market world. That's where it's going to come from. And people will say, well, you can't get contagion anymore. There's the linkage is not as strong. Central banks have a lot of FX reserves and all that stuff. That's nonsense. That's not the way money moves around the world. The moment you suspect losses are going to start, you move your money, and then one transaction sort of leads into the next and the next and the next, and that's what contagion is all about. The industry. I was around, of course, back in the 90s when the Asian FX crisis hit, and I remember they're all trying to show how much FX reserves Thailand had over Malaysia and things like that. And it didn't matter. Money just ran immediately. And so that's what we'll see coming up here. But in terms of the pathway and the way that we suspect it'll go, after the emerging market world, and then you would have, for example, like CAD, Aussie, Sterling, that market will get hit. And this is just the FX market. You get knock-on effects everywhere, of course. And then Euro, I mean, the Eurozone, it's probably the single biggest financial time bomb that's ticking out there. When the ECB, if they try to talk or sound hawkish, don't believe them. The moment they raise rates or even try to raise rates, it just destroys their banking system, and it destroys their pension fund system. The ECB itself, if they will go mark to market on their bond portfolio with any the slightest
Okay.
tick in
So
rates,
do you
they'll
think
get killed.
the UK will get away with their interest rate hike? They did it.
So right now, everyone's going to try to raise rates or sound hawkish doing it because the Americans have said, "Hey, this is what we're going to do." And then again, you have to say you shouldn't say, "Hey, I think they should do this," or "They shouldn't do that." They've now been very clear. We're going to raise rates. We're going to stop QE. We're turning hawkish. And that's just going to start to suck the energy and the air out of the emerging market world, especially. And then when you lay on top of that deteriorating credit conditions. So again, like if you're outside the U.S., and you have US dollar denominated debt and your revenues are in local currency, or as credit spreads widen, banks got to call it. It's just the world doesn't work with this, and one event leads to the other. So after euro, you have yen is there, and then you have the dollar as the last man standing. So our view on the dollar getting incredibly strong from here, it's not because the US it's really awesome and great and everything. It's just that it'll be the last market to experience any type of an adjustment or a crisis. And when it does, that'll be the biggest trade of your lifetime coming up, is to short the dollar. But what I would suggest, anyone that thinks the US is the first market to have the big crisis, I think you're going to lose a lot of money on that trade. Instead, you have to change your thinking and your order. And so that's one of the advantages. I mean, the U.S. is the biggest market in the world. Everything flows to the U.S. and so forth. But the world's a big place. And again, I've been outside the U.S. for a long time. Home country bias is rampant everywhere around the world. I happen to live in a place that had zero home country bias for over a decade. And everyone I worked with, they're all expats as well. So if you remove, with home country bias, for example, if you look at the Canadian equity market or Canadian investors, they all holding Canadian equities. And you say, well, why don't you hold, Australian banks or German banks or American banks? Oh, that's too risky. And then you chat with the Australians, why don't you hold Canadian? No, we like our stocks here.
That's an interesting concept. Yeah.
Again, things are set up here, to have a pretty big move. And, we haven't even talked inflation. So by the way, the easiest way for the Americans to fix their inflation problem is to let the dollar run hot and to have equities sell off. I mean, that's all they need to do. That'll be an instant cure. Of course, it creates total chaos in every other market and country. So every other market will experience even higher inflation. But, again, everything can't be constant in the world. One market will offset the other.
Interesting, Keith. Just something I've noticed is on the two big sell-off days in equities, dollar didn't catch a bid this time. So I think that we're going to see what happens here, when or if this is a policy error by central banks and the Fed, and they have to reverse. We'll see what happens here in the first quarter. I think it's going to be 2022 is going to be pretty interesting, FX wise, and really all asset class wise. So appreciate your view. I can see that happening too. Just liquidation of everything, because you need cash to service debt, even sell your kitchen sink. So appreciate that. And gold, same story. Will gold do okay in a deflationary environment like it did in the 30s?
Well, we're not expecting this big deflationary environment to come up. Remember, you can have inflation in some markets, deflation in other markets, and so forth. I just suggest that the easiest way for the Fed to cure their inflation story is to do that. However, with gold, we neither love nor hate gold. We had a pretty big position in gold back in the early part of 09, 10. And when it popped up, and then we reduced it quite a bit. So our view on gold is that inflation doesn't matter. Like if I said to you, a year ago or 2 years ago, and I said, hey, you know what, inflation's going to run 6, 7, 8%. What would you buy? And a friend of mine said, hey, let's buy gold. And then all of a sudden you're like, oh man, I haven't made money. What about your second favorite trade? And you say, well, let's short the bond market. So our view on gold might be a bit different than the mainstream. We do not see gold as protection against inflation or anything else. It's that market will catch bid, a very strong bid, as soon as crap is happening around the world. So what we expect to happen, it's a really good market for gold that's coming up. We're not quite there yet. But the opportunity to make a ton of money on gold, it's coming. It's there soon. But the initial jump higher. So the key for gold, you want to see gold staying strong or flat at worst when the dollar is really surging higher. So that means on cross rates, gold is doing really well, versus sterling, euro, yen, CAD, whatever. But the moment that all currencies are declining relative to the dollar and gold is holding its own, and that's what we're looking for. And that's when we'll start, doing a pretty strong and aggressive rotation out of, a dollar allocation, towards gold, for example. So, and you just got to be patient with these trades. Let the market come. Let the market come to you. So
let the gold come to you. At what level do you think you're going to be able to pick it up? 1,400, 1,000?
Yeah, again, it's not a level. We're looking for the market reaction relative to. So let's just say gold. I mean, gold can come off 10% next week. Like that's nothing. Again, we want to see how gold responds to a surging US dollar. And
Okay.
when it passes that test, and it doesn't matter then if it's at, 2000 or if it's at 1600, that's when. So what you want to do, you for every market, because we invest in a lot of different markets, and nothing is ever 100% assured, but you want to take these asymmetric trades or asymmetric positions. So like a very easy one today, for example. So if everyone knows the VIX usually, if you're in the market a little bit, like clockwork, whenever the VIX gets up close to 40, now there are a number of ways to make, well, you probably have a 95% probability of making money on that trade. And then maybe like say a 10% chance of really not making money. But as soon as you see VIX hitting, say like in the high 30s or 40, there are a couple of short things you can do, to capture that, whether you want to go on the equity side or even the volatility side. But something like that event, it might happen once a year.
Well, I
three
think
times every 2 years.
Yeah, some of the outcomes you're talking about, I wouldn't want to be short volatility. VIX could go to 100 under those circumstances that you're talking about.
Yeah, absolutely. But you'll also see
so
volatility surging in the FX world as well.
Good. Oh God, from your lips, buddy. We're all,
and you see credit
we've been
spreads
here.
widen.
Yeah. Okay,
It's
I'm ready.
pretty good.
Where
are you based? Yeah.
I'm in outside of San Diego. I've been preparing my whole life for what's coming in 2022. How about that? I'm ready. So I want to wish you and your family and all your associates at IceCap Global. I want to wish you a happy holiday and Merry Christmas, Keith. Appreciate you coming in over the years and bumming us out with reality. But I really believe that people have to take look at both sides of the coin, because in this business, anything and everything will happen.
Right? That's great. Yeah, absolutely, Dale.
Anything and everything. Yeah.
Yeah.
You have to be
happy
open
holidays to everyone. And I know you have people here from all over. So to give you an idea, up here, we're in Nova Scotia. So it's getting pretty cool these days. It's negative Celsius. Yeah, we're fine. We're fine. We're good. Okay, guys. Thank you to everyone.
Build a snowman and name it Dale Pinkert. That'll be like my trip to Nova Scotia.
He would be a handsome snowman, wouldn't he?
Kids, really happy New Year, and I hope you're on the right side of everything in 2022.
That's great. Thank you, Dale. I appreciate it.
All right, Keith Dicker, everybody. You can follow him at IceCap Global. Here's his handle right here at IceCap Global. There's Keith, and check out his website. And that's going to be a wrap, everyone. Good hunting. The rest of the day, kind of take it easy and wind down. You could join the crew in 11 minutes for the morning edge. Adios. And you know what? Don't just count your pips, count your blessings. Everyone can find one. See you guys tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.